Hi, good evening, everyone. Thank you so much for joining the special Carnegie Mellon Mumbai interview on deep tech investing with Rajeev Mantri, who is the MD of Navam Capital and the co-author of the best-selling book, A New Idea of India. My name is Aashay Doshi. I'll be leading the interview today, along with Ronak Jhaveri, who will be running Q&A. Before we start, I want to invite Rekha Koita, who's the head of the CMU Mumbai Alumni Network, to say a few words of welcome to Rajeev as well as our attendees. So Rekha.
Thank you, Aashay. And first of all, I think good evening, everyone, and welcome to this session. Rajeev, thank you so much for taking the time out for our, CMU Alumni Association event. We're really grateful to have you here today. And also grateful for all the people who have joined us, I think in spite of all their busy schedules. Deep tech investing is there's so much that we have heard about, right? I think whether it's biotech or crypto, blockchain, a lot of lot is heard, lot is said, a lot of conflicting opinions also on many of these things. And I think it's going to be really fascinating to listen to Rajeev and learn more and maybe clarify some of the doubts and questions that we all have. So without kind of much ado, I'd like to hand it over to Aashay. And before that, of course, many thanks, Aashay, for organizing that and Ronak for helping him out, today. So over to you, Aashay.
Thank you, Rekha. And like you said, today's interview is extremely special given that India is on a cusp and inflection point on technology, whether it is on biotech, blockchain, hardware, and more. And to delve further, we've invited Rajeev Mantri, who doesn't really need much of an introduction, but as he is one of the foremost thought leaders on entrepreneurship, investing, and geopolitics in India. In addition to being MD at Navam Capital, he is also a very actively published columnist and contributor to the Wall Street Journal, Mint, Swarajya, Hindustan Times, and many other publications. He also actively contributes to the geopolitical discourse in the country, which I'm happy about that someone on the center right is intellectually stimulating discussions. He is a Raisina Fellow nominated by the Observer Research Foundation, which is one of the leading think tanks based in New Delhi. And he graduated from Northwestern as well as Columbia Business School. So we have a lot of the alums who are attending from those schools as well today. And last but not the least, he is a co-author of the best-selling book, A New Idea of India, which I was fortunate to receive a signed copy of, and that delves into the history and future of modern India. So Rajeev, before we start, welcome. I'd like to invite you to say a few words of welcome to our very eclectic audience, as well as our community.
No, thank you, Aashay. Thank you, Rekha, for inviting me to this forum. Very happy to sort of speak to everyone. And I almost went to Carnegie Mellon, so I guess better than attending, this is the next best thing.
Absolutely. Great. Rajeev, really excited for this. Just going over the format real quick. We're going to have around 40 to 45 minutes of me interviewing Rajeev. And after that, we will go into the Q&A. So for the audience, please look at the chat box and put in your questions as we go through. You'll be able to unmute yourself towards the end and ask Rajeev your questions yourself. So with that, Rajeev, we'll delve into the interview because there's so much to discuss. So part one of the interview will delve into deep tech ventures and Navam Capital. So like Rekha said, deep tech, it encompasses entrepreneurship on a range of technical areas. The term's been around for decades, starting with Bell Labs in the US, AT&T, and off late in China. They account for 80% of deep tech investing in the world. So what are your initial thoughts about deep tech investing in India, and what are you most excited about?
So I would say first, let's be clear about what we mean by deep tech. And to me, it is any area which is fundamentally driven by core science and technology, where there is typically some intellectual property or some kind of proprietary knowledge that endows the product with certain advantages. So I would sort of ring fence deep tech in that manner to begin with. And we find that such kind of ventures usually emerge out of academic research labs or university spinouts, and sometimes even sort of corporate R&D labs. So that is kind of the breeding ground for this kind of innovation. And obviously with computer science oriented sort of deep tech companies, those nowadays are coming from everywhere. not just R&D labs and academic institutions.
Right.
So what we really need to sort of enable deep tech is really a kind of concentrated pool of talent. Like if you have academic talent in a geography or an economy,
Right.
then that automatically sort of is the contributes like the initial building blocks to have that sort of entrepreneurship, where there is some scientist or technologist somewhere, and they start thinking in the direction of what if they try to commercialize their research, or what if they try to take their kind of lab work into the marketplace, and that's where it kind of begins. So what usually would happen in India is most of our talent in this kind of space would migrate out of the country to the advanced economies, largely because our country was not in the position or not being in the kind of developmental stage to support such companies. We were way behind the curve, and thus the human capital that we had found a better kind of growth sort of prospect in the advanced economies, especially in the US. So that is why for many decades, actually, we were losing sort of that talent to the West and so on. So what is happening now, I think, is that more and more people are actually staying on, or in fact, in many cases, even coming back to India, attracted by the economic prospects, the entrepreneurial prospects here that a growing economy is offering. And whether that's for professional employment or whether that's for starting up, I mean, both things are happening, which is kind of unprecedented. So that is something I think really quite new and very exciting. And for the first time, we have that kind of financial risk capital, human capital, all those pieces kind of coming together to build up these kind of engineering-driven companies.
Yes.
In areas like hardware, biotech, artificial intelligence, and even industries like space tech and defense, which were until recently completely closed off for the private sector. So now they've been opened up for private participation, and we are seeing a slew of companies emerging in that area as well. So there are both these kind of tailwinds, one from economic progress and the other from policy reforms that are creating space for such entrepreneurship.
Yes, that's you brought up an interesting point about IP protection. And till now, US is a hotbed of R&D. China's now catching up with together around 80%. So do you think India has the infrastructure? Are we moving towards that infrastructure to protect IP and give that confidence to entrepreneurs and investors, so that, and why does this range of entrepreneurship deep tech matter to India?
So there's no doubt that US and China, they are the biggest two biggest kind of venture ecosystems, period. Like any kind of entrepreneurship, any kind of venture investing, the scale on which it happens in the US as well as China, I think India is probably third by a distance even today, in spite of the growth of the last 2-3 years. So naturally, those two countries will also dominate the frontier, which is deep technology. So I mean, the question really is, how do we see this evolving? So if you believe that India as an economy is going to grow in size and importance for the world, then I think even the frontier tech ecosystem, the deep tech ecosystem will grow in the country. So we too will be playing more at the frontier of technology, definitely more than we were, or rather more than we are right now. As today we are doing far better than we were, let's say, 5 years ago. So what all will unfold in the coming decade, if you are an India optimist like I am, is actually very exciting. So the fundamental point is, if you have as much technical talent as we have in India, it's difficult to see how this does not sort of really scale up. And there is hard evidence for this. So if you look at what is called the GCC industry, the Global Capability Center industry in the country. So these are essentially R&D outposts for pretty much all the global 500, global 1000 companies. And they are scattered all over the country, from Hyderabad and Bangalore to Pune to Navi Mumbai and Mumbai to the NCR region. And these capability centers are doing some of the most important research and development work for the MNCs. They employ over 1 million scientists and engineers. the cumulative sort of export that this sector delivers to the country is north of $30 billion a year. And you would be hard pressed actually to find some European or American company or even Japanese or Korean company of scale which doesn't have a significant R&D presence in India today. So that kind of ecosystem already exists in the country.
Right.
And essentially, if we have to succeed with deep tech entrepreneurship, I think what we need to do is take that services orientation and turn it into more of a manufacturing or kind of product orientation, where we have basically some of those scientists and technologists like building companies, rather than only working for the larger corporations.
Right.
And I think it's a testament to the quality and cost effectiveness of Indian talent that so many companies are actually doing the critical work here. And if this talent is good enough to do this kind of critical R&D, then why shouldn't they take that next step forward? I've always believed that.
Absolutely. And it's good to see the optimism backed by good data as well as trends. So shifting the focus to Navam Capital, so how do you view your investment thesis? What are you investing in these days? And how do you look at it from an investor perspective?
So the kind of generalist way to sort of look at venture investing, look at the asset class, is to essentially focus on three parameters, right? So those would be team, technology, and market. And it comes down to is a particular startup a large enough opportunity to sort of take private capital or venture capital, and then what is so novel or different about what they're developing and what is being offered, and finally and most importantly, can the particular team actually execute and deliver on what they're claiming? Right. So I think these three parameters apply in general to sort of all kinds of early stage investing, seed and early stage investing. I think the additional filter to apply when assessing deep tech companies is to be kind of, so one has to be a little wary of participating in areas too early, and this can be hard to figure out. So that's my sort of upfront caveat. But my kind of rule of thumb is not to invest in something that is trying to bundle too many new things together. So when you do that, you only sort of concatenate failure modes. Stated differently, nothing should be novel except in aggregate, if that makes any sense. Yeah. And to understand this, think of the opposite thing, where everything is novel, even in aggregate, right? So that will translate into essentially a buzzword soup, which we are all kind of intuitively wary of, and we would roll eyes at. So when you hear things like, let's say, a geothermal energy powered crypto mining operation that is creating like a virtual world of AI bots, what does that mean? It's just a buzzword soup, right? Like we all sort of understand that something is off here, doesn't make sense.
Correct.
And I think a lot of deep tech has this kind of a wrapper around it, unfortunately, where essentially there's a lot of just buzzwords strung together.
Right.
So that's why I feel that trying to do too many novel things with a kind of novel outcome is just too much, and you sort of kind of aggregate your failure modes and set up for very difficult problems. So and then if you talk about what it takes for a venture to be successful, ultimately there has to be a specific customer need. Business is simple. It's not easy, but it is simple. So there has to be a specific customer need that is being fulfilled. And I think very important to bear in mind that technology is only a means to an end and not the end in itself.
Correct.
So in drug discovery, for example, a product has to fulfill an unmet clinical need. That's the kind of regulatory requirement to launch a new drug. So now a startup could use computational tools to sort of eliminate drug candidates rather than taking an entirely wet lab approach. So when I was in college, for example, computational material science was a very fast emerging category. This is almost 20 years ago. So computational material science today is quite mainstream. and drug companies are using it, and it's one of the most exciting areas where you are seeing kind of an interdisciplinary application of AI and software tools for kind of surfacing drug candidates, and that actually saves a lot of time and effort for drug developers. So there, for example, you're combining existing technologies and tools, but towards a novel kind of towards a novel end, so to say. So the end is kind of clear, when you're trying to do this. Or take another example. Take a robotics company that could reduce the cost of deploying automation, but it would do so by taking a machine learning approach rather than sort of using expensive hardware. So essentially, you use software to get over the capital cost of hardware, and that kind of enables automation for even small businesses, even for small and medium enterprises, rather than just the large cap or mega sort of auto corporations and other kinds of companies that are doing kind of very large scale manufacturing.
Right.
So I would just leave it at that. It's critical to not concatenate a string of new things, because that simply leads to difficulties in achieving anything. And very important to have a kind of very specific, very well defined customer need that is being fulfilled. And finally, the kind of I think a sort of peculiar risk with deep tech is the financing risk. So and this is especially true for a market like India, where this is still a kind of nascent category. Easier to find investors who are comfortable with consumer internet or software and so on, but harder to find investors even today for slightly kind of weirder categories, if you want to call it that. So there's a financing risk, and that is why having that laser focus and being very clear about what you're going after is even more critical.
Absolutely. I think that focus, what you mentioned, is key, because in the US, for example, Google X, and they have multiple $1 billion budgets that work on these R&D and special projects and deep tech, versus in India where it's nascent. So got to be focused and then kind of build up to the aggregate, as you said.
No, very much so. Very much so.
And this is a great segue. Sorry, go ahead.
Yeah, no, I can go to the next one here.
Yeah, so this is a great segue into you mentioned hardware, you mentioned drug development. So delving into the specific sectors into deep tech. So let's jump into hardware, biotech, and blockchain. So first in hardware, as you've seen, India is seeing a rise in electronic hardware manufacturing, especially like a lot of companies and countries are trying to diversify the supply chain out of China, for example, and come to India. We've seen the iPhone 13 is now being assembled in India, and there's a lot of backward integration. So what is the long-term success of this in hardware, and what is the effect of this success on deep tech? And do you think India can scale like China, a homogeneous country at scale like China? Can we do that in hardware?
That's a great question. So now, if you go back a decade or even 5-6 years, so if you're a hardware entrepreneur in India, let's say in 2012 or 2014, so there's an entirely different set of challenges, right? So the electronics value chains are not really located in the country. So even for kind of prototyping, an entrepreneur has to kind of look at alternatives outside India, because it's harder to do things in India. Correct. And it's harder to sort of scale things up in India, because just your manufacturing partners and all simply don't operate here, right? So you have to go to China, or you have to go to some other country. And small businesses would face these kind of challenges in working with globally distributed supply chains from day one, right? So what has changed actually in the last 5-6 years now, as you mentioned, India actually started assembling, not even manufacturing in any way, but assembling, essentially importing different components and assembling, the iPhone SE, the entry-level iPhone.
Yep.
So we had started with that 5-6 years ago, but just recently we are now at the point where we are working with the most sophisticated iPhone, the iPhone 13, and comparable Android phones too. So what has happened is we are building capabilities in the country now where like if you need to sort of access, let's say, electronics value chains, component suppliers, those kind of vendors, you might find them in India. I'm not saying that you don't need to go abroad now, but the delta in the last 5 years is clearly sort of working in the favor of making in India, even in areas like hardware.
Yep.
And this has momentum. So we will see, I think, in the next 4, 5, 8 years, that a larger and larger sort of value addition of electronic items like phones and other hardware could be happening in the country.
Right.
And this really sets the stage for sort of Indian startups, for Indian entrepreneurs to even innovate on the hardware piece, which earlier was simply not possible.
Yeah, probably unthinkable.
Yeah, it was almost unthinkable. I mean, I know of like companies who struggled and had all kinds of issues, and then they had to externalize and domicile in the US, and then all those hoops that one had to jump through. But that is somewhat changing now because of all the policy level contributions that have come together in the last 5, 7 years.
Absolutely. And talking about the last 5, 7 years, I mean, so I mentioned China, which is a homogeneous country with 95% of the country speaking Mandarin, and scaling is much easier because there's no democracy or multiple parties. So do you think this hardware manufacturing and deep tech investing can be scaled state to state, given that we have often different governments and changing governments and labor issues along the way?
No, absolutely. I think, see, even with China, to be fair, China is actually not as centralized as most people think. So Chinese provinces operate in a highly decentralized manner. Whether it's policy making for the provinces, the governor of a province in China is like actually very powerful, much like an Indian chief minister, by the way. Indian chief ministers can do pretty much whatever's on the state list, they can do that.
Right.
And in fact, even for items on the concurrent list, like if you have a kind of certain level of coordination with the union government, even that is not really a bottleneck. So I think the intent has to be actually for Indian state governments to drive sort of reforms in areas like, let's say, labor laws, which are important for scaling up manufacturing and electronics manufacturing and so on, those areas. So I don't see democracy as a bottleneck at all. In fact, usually it is a frustrating thing as a observer and as a participant in the sort of economy, obviously, where we find random bottlenecks coming up and we find obstructions coming up from nowhere and delaying things. But net, I think it's a good thing where, frankly, there is some input that comes out of that vivad or out of that debate.
Yeah.
So and then usually that's absorbed somewhere, and we course correct, we kind of take our time, but we eventually get to the right answer.
Right. And I think as investors, and you know better than me, but probably that is baked in when you invest in India. You are expecting that level of, not disturbances, but like, bottlenecks here and there, but that's baked into your thesis anyway as an investor.
Yeah, and frankly, it's anyway very state specific, right? So investors and business operators are going wherever they are welcome. So there are states which are doing that. There are states which are rolling out the red carpet, and there are states which are still holding on to the past failures. So capital is going where it is welcome, and
Absolutely.
There's enough competition at that level. We have obviously number of state governments, and they are nowadays, all of them are competing for investment. So whoever is able to offer that kind of a facility to businesses, the businesses are going there.
Right. And I think this is a great segue. We spoke about China, so now we can speak about COVID. So the Make in India success story, not only with the COVID app that was scaled across the country, as well as our indigenous vaccination manufacturing program has been a really, really good example of Make in India. Governments, including India, have realized that you need to have control on your supply chain. You need to have control on your medical supply. And we were fortunate as a developing country to have that control on supply chain. So we've traditionally had a strong pharma industry that manufactures generic drugs that are off patent. we've not excelled at invention and drug development. Why do you think that is, and what is exciting about this space?
No, so no doubt the pandemic has really, I think, driven home the message that it's critical to have national capacities in fields like drug development and vaccine development. And I mean, just imagine where we would be as a country if we didn't have Bharat Biotech and Serum Institute.
Yep.
So I have not even checked of late what the vaccination count is in the country, but must be close to 2 billion or so, or even more than that.
Yeah, with the double doses, yeah, it's close to 2 billion. Yes.
Yeah. So it doesn't even make news now. I mean, it is such a kind of outstanding success that it's no longer a topic of conversation, and
Right.
we all kind of carrying on with our lives as if things are normalized for everyone. But in other parts of the world, things are not normalized. We are seeing in China actually. So they didn't have a successful vaccine. The Chinese vaccine actually did not work.
Yep. Sinovac.
And our vaccines did work. Particularly the indigenous vaccine, the Bharat Biotech vaccine, has also worked, much to the chagrin of certain special interests in the country.
Yep.
But at least I think now there is a consensus in the country that we have accepted and realized the importance of the private sector for the pharma and biotech industry, not just from an economic perspective, but crucially from a public health perspective. And now the question on why we're not able to sort of move from generics into the more higher value areas of the pharma industry in drug development and so on. The truth of the matter is, India's had a range of regulatory kind of issues going on, which stretch back over a decade now, actually. And if you go back to I think it was 2013. In fact, we wrote about this in our book as well, on how the clinical trials in the country were kind of hobbled by sort of certain NGOs who filed PILs, and then the courts in the country put all the trials on ice.
Yep.
Overnight, all the clinical trials that were going on were stopped or ordered to be stopped by the courts, and this was just devastating for anyone who's been a part of a clinical trial can tell you that it's just a devastating blow for any company to go through that. So there have been a number of policy mess ups, to put it succinctly, and the second reason is that the US remains the center of gravity and the biotech powerhouse, not just sort of out of Asia, not just leaving Asia, but globally. And the primary reason for that is that the property rights in the US are sacrosanct. Yes. So no court, no kind of governmental authority can snatch away the intellectual property rights and patents of a private company, and they take that very seriously over there. So there is a strong incentive in the US for inventors, for venture-backed companies to find cures for kind of new medicines and to stake capital behind risky things like finding a cure for a disease. That's not the case for most of Asia and Europe. And that's, I think, one of the primary reasons why the biotech industry kind of prefers the US. And then obviously, everything else flows from there. Your capital markets come up, both on the private and public side. And then there's a concentration of talent with all the kind of great American universities and the kind of close linkages that the university system has in the US with the healthcare system. So kind of research and clinical practice there are kind of very closely connected, which is kind of not the case in a country like India, for example.
Yeah.
So they have built these advantages up over many decades. And honestly, again, if you see who are the doctors and who are the kind of scientists there, we often find there are Indian origin people.
Yes.
If not first generation Indians, they are usually second generation Indians, right? So again, it speaks to the kind of inherent capacities of India, but those capacities have not been harnessed so far towards like doing high value work. We had the mindset of a remittance economy.
Yes.
Let's train those engineers and doctors and send them to the US, and then they will earn dollar salaries and send back money to India, and we are fine with that. That was the limit of our kind of ambition.
Right.
But somewhere as a country, I think we need to raise that. We need to sort of think bigger in terms of sort of doing more value add here. building up sort of innovation here instead of being satisfied with remittances.
Absolutely. And one thing on drug development, we talked about generic drug development. Do you think, like in the US, your healthcare costs are pretty high? I know with insurance covers it because the cost of R&D, cost of drug development is so much more. The cost is either passed on to the customer or the insurance companies, and the customers are paying the premium. Given that generic medicines help with the lower cost of medicine in India and for the masses, do you think India is ready?
No doubt about that. So if you really analyze why it is expensive to sort of develop medicines, it comes down to the time and cost of a clinical trial.
Yes.
Right. So, and then you ask, why does it take so much time to sort of run a trial? Well, one of the big challenges is kind of patient recruitment. So it takes time to find the patients. It takes time to sort of recruit patients in size in Western countries. But now if you flip that paradigm, if you look at a country like India, which has a very large population, which has a very sort of one of the best kind of genetic diversities in a population that we can find. So if we were able to run clinical trials here, it would help in reducing the cost of drugs, right? The developmental cost would come down because the trials would cost less. And it is ultimately all tied to what goes into making a drug, right?
Right.
And you combine that aspect of essentially there are two vectors to tackle this. One is the globalization vector, which is to run trials in India and countries like India, and the second vector is technology vector,
yes.
which essentially would mean using computational sort of tools and software tools to sort of get rid of certain wet lab work, which is time intensive, which is cost intensive, and so on. So I think if you combine both these things together, we can sort of develop drugs at a cheaper sort of cost.
Yes.
You can dramatically sort of alter that. And there's no reason this can't happen, actually. In fact, it is already happening. But we need sort of countries like India to sort of come up with sound clinical trial regimes, and which will be accepted everywhere, which are sort of reliable and sort of trustworthy, so that we can actually see the benefit of the large population that we have.
Absolutely, and that's I think those are great points. And given a vaccination drive, I think the medical and biotech industry is at an inflection point, which is exciting. Before we move on to the next hot topic of blockchain and cryptocurrency, I want to direct everyone's attention again to the chat box. I see the questions coming in, so please keep putting the questions in, and we'll get to the Q&A in about 12 to 15 minutes. So Rajeev, the next component is on blockchain and cryptocurrency. Obviously, a lot of noise, a lot of advertisements, a lot of excitement as well as confusion around them. So I think it'll be interesting to discuss that. So on a very basic level, what is your outlook and understanding of cryptocurrency? I mean, historically, when we had the barter system, people assigned values to different objects and equated it with another object. Then we went to the gold standard. Everyone said, okay, gold has intrinsic value. Everyone adopted it. So we had the gold standard. And then we had the currency system that replaced it. And now we have cryptocurrency that is, or digital currency that is now like the new precious metal. So overall, what are your initial high-level views on cryptocurrency, specifically in India as well as abroad?
So this area is obviously at the frontier of technology right now. And in one word, it comes down to disintermediation. If I had to just use one word, I would use that word.
Yep.
And I've written on this back in 2014 that what the internet did to essentially the media industry and newspapers is what blockchain and crypto can do to the financial sector. So that is at once very exciting, and also, if you're a regulator, that's very scary.
Yes.
If you're a government, that's very scary. So the core of it is essentially peer-to-peer value transfer without the need for intermediaries, which frankly is a very extremely weird idea, which has never happened ever. Right. And which is why people don't know how to deal with it. And this is much like how the internet enabled peer-to-peer information sharing. So because of the kind of information sharing which we now all take for granted, when we are sort of forwarding messages on WhatsApp or tweeting or posting on Facebook, we are essentially sharing messages peer to peer.
Correct.
And the role of that intermediary, which is enabling that digital platform, which is enabling that, the role of that platform is actually minimal. Unless someone is doing something really sort of at the edge case, most messages can just be sent peer to peer, and this was never the norm actually in human history. So and obviously the advent of these technologies has also kind of made irrelevant a number of large industries and even people. Actually, the media sort of power brokers are all made irrelevant today, and thus you find them kind of complaining about these changes often. So digital assets in the similar kind of manner are a very powerful kind of disintermediary kind of force, and anyone who knows the history of money will be quite puzzled by what they represent. So this also makes it very difficult for regulators, for governments to wrap their heads around it and to come out with a coherent kind of way to regulate these new things. So essentially there are challenges in a big way around areas like money laundering, around terror financing, and the abuse of such peer-to-peer value transfer capabilities for kind of nefarious ends of these types.
Yes.
So now crypto and decentralized finance, or DeFi as it is called, which is essentially using kind of digital assets and cryptocurrencies to develop financial services without intermediaries, again, I would emphasize, is something which remains to be seen whether actually sovereigns will permit that. There is a school of thought which goes that sovereigns can't stop it, and that sovereigns will ultimately have to bend before this. But my view is more towards the slightly conservative kind of angle that we will see sovereigns taking charge here in some way, shape, or form. Things are very much in flux at the moment, and the reason it has not happened yet is I think it requires some sort of a coming together of larger countries and deciding that this is how we're going to regulate this new area. And until there is that kind of international sort of collaboration, there will be this kind of cat and mouse going on between different countries and the whole space. And additionally, what is happening is many sort of smaller sovereigns, so city states and places like UAE and other countries, so they are able to provide very aggressive, very kind of open, welcoming, highly liberal regulatory regimes, which frankly countries like the UK or the US or India simply cannot, I would argue. It's just
like Estonia and El Salvador.
All those smaller sovereigns and those kind of countries are going very aggressively into embracing some of these in a way which frankly big countries cannot even contemplate. So let's see. I mean, it's a very interesting, it's a very intellectually interesting sort of debate to watch. As far as investment in that area is concerned, my interest is only in what we can do with this. So there are a lot of people who are interested in trading tokens and trading cryptocurrencies and so on. And that, by the way, has become much harder now if you're an Indian resident because of changes in the tax policy.
Correct.
But my interest, and I think the interest of any serious investor, should be in terms of what we can build with this. So what can let's say the Ethereum blockchain be used for?
Right.
And again, we are seeing certain early instances of what the applications could be, and it's still sort of all in very flux, very high state of flux right now. Let's see where all of it falls, but I would sort of try to track what the use cases are emerging as, and ultimately why should I as a user choose to switch to a decentralized service versus a centralized service. Until that is clear, I think most people will, in spite of all the evils of big tech and so on, all the kind of privacy challenges or other kinds of issues that they have, I think most of us will be happy using those services unless something more compelling comes along.
Yes, no, absolutely. And you mentioned decentralization. So I was actually talking to Ashish Chauhan, who you met, I know, at the BSc recently too. And his question was simple. He's like, with cryptocurrency, if technically anyone can mine it, who owns it? And ultimately, do you see it centralizing? And as it is, like, there's only 10% of miners who have mined around, I think, 60 or 65% of the coins today. So is it actually decentralized, or is it just bound to be centralized at some point, just like the gold system was and when the currency system came in?
No, so I think the end game here, if I had to speculate, and this is just a guessing game by me. It's just a wild guess. So if I had to speculate, I would say they would be regulated at some point, like art, or like capital assets, which are like art essentially.
Which is what India is doing right now, treating it as
like
gambling winnings
like
of us.
Yeah, treat it like a kind of artwork or some other kind of artifact. And it should be disclosed, it should be sort of documented, and obviously the sovereign, the government will want to know who's holding how much and what were the means of acquiring that.
Right.
So I think all this is inevitable. In fact, it's probably good for the space because it will bring in participants who want this clarity to be there. I mean, a lot of people are sitting on the sidelines right now because they don't want to participate in something which is, might be illegal. So actually giving it a kind of legal and regulatory framework will help expand the market, as often happens with deep technology areas.
Right.
So that whole regulatory issue is, I think, that overhang is a bit too much right now for anyone who's a resident in India.
Correct.
And I mean, those who are not resident here, or those who have enough stakes to relocate offshore purely for this purpose, are already doing that.
Yeah. And I think what you mentioned about art is interesting, because as of now, India is treating it as an asset and not as a currency, which is not at least the ethos of a cryptocurrency.
No, which is I think a fair characterization. I mean, ultimately, if you go and have dinner somewhere, you're not going to pay someone with shares of Bajaj Finance, for example, right? You'll pay them cash.
Fair.
So in the same way, you should not be able to pay someone in like Bitcoin or in Ethereum or Ether or any other of these crypto assets. So, I mean, the right to issue currency is a right which no sovereign will give up. I think that's just a reality.
Absolutely. And are you bullish on the underlying technology, which is blockchain, for smart contracts? Do you think smart contracts can be done in India, like say for mortgages or bank loans? Or
I think that's a very high potential area. So I'd written about this in 2014, and I think that's a very high potential area for India from the view of how terrible our court system is. So my view is very simple. I think there'll be technology solutions coming before we have large-scale judicial reforms. So there are all kinds of problems with judicial reforms. There are all kinds of problems with having more efficiency in the court system, even though all the problems are really well known at this point.
Right.
We know what we need to do, but for various reasons of like political economy, those things are not happening, or happening very slowly. So the interim solution, or rather what will happen in the interim is we will see some kind of technologies emerging, which will offer something better to consumers, better to citizens. And if those citizens choose to contract in that manner, then automatically you will have essentially, almost a privatization of justice administration, if you can call it that.
Right. And before we move into the last part, are you at all concerned about the consumer education around it? Because now you see IPL has advertisements on all the cryptocurrencies, and a lot of people diving into it just because, they've heard about it or heard the hype.
For sure. No, this is, I mean, my views, this was kind of unconscionable sort of advertising, and frankly, foolish advertising by many of these exchanges.
Yeah.
Simply because, they have brought the kind of heavy-handed taxation rules and regulations onto themselves by their aggressive advertising and trying to reel in unsuspecting small savers. So the reality in India is that it's taken many decades of hard work to actually financialize savings, to just build the trust of a small saver into the formal financial system has taken a lot of work for the last 20-25 years, and probably even more than that. And finally, now we are seeing that small investors are participating at scale in the equity market. They are putting their savings into stock investments, into like debt funds and so on and so forth. And the last thing we need is some kind of a speculative sort of push coming up from crypto assets and trying to get in some senior citizen sitting in, I don't know, some small town of Madhya Pradesh as a token investor. For what? I mean, these are highly speculative assets which should not be in the realm of investment for those who are not understanding most of what is going on over here.
Absolutely. And I think just getting a perspective on this forum around understanding and thinking about these technologies is extremely valuable, not only for me, because everyone is relearning and learning every day. There's so much information out there. So thank you for that perspective. The final part of the interview before we move into the Q&A is around your best-selling book, A New Idea of India, that you co-authored with Harsh. This book has been touted as well as reviewed by not only Prime Minister Modi. I know he tweeted about it, and you presented it to the finance minister, but also opposition parties such as Shashi Tharoor and everyone who's written forwards for your book. So in terms of this book that you've written, you've talked about a variety of issues, such as, something for the first time that I saw someone bringing up, why are laws different for different people in India when it has to be law and order state. So what, in the purview of A New Idea of India, what makes you bullish on India, and what do you think is our biggest challenge and opportunity in the coming 5 years?
So I'd say my view is today, most of the country wants progress and prosperity. I think in a broad sense, like I don't see the current generation sort of taking a backseat and saying ki theek hai, jo chal raha hai chalne do, we don't care, that kind of thing. And I think political leaders have to ultimately respond to that demand from voters who are saying that what more do I get? How are you making things better? How are you improving things? Tell me. And there was this amazing statistic I saw a few days ago that there are now more people who use smartphones in India than those who use toothbrush. So wow. there are more smartphone users than in the whole country than there are people who use toothbrushes. Isn't that astonishing? So what that does is, it's not possible to fool all the people all the time anymore, as was going on, frankly, in our country. For I think the first sort of easily 30-40 years of independence, a lot of things were just going on and no one knew what was transpiring, because they were being almost lied to, one can say. And I truly believe that like a lot of things were kept from the people. They were being misled by leaders. There was all kinds of self-interested and narrow-minded kind of people running the country, who frankly made us poorer than Pakistan at one point. A lot of people don't realize this, but as a country, we were on a per capita basis poorer than Pakistan just 30 years ago.
Yes.
So how did we land up over there? A country with the wealth of natural resources, human resources that India has, and the sheer size that India has, how can this happen unless someone really tries to bring the country down?
Yeah.
So I think some people had succeeded in doing that for a while. And what has really changed now is the whole information revolution, connectivity everywhere, people hearing directly from their leaders, hearing directly about what changes are being brought. Maybe if we rewind 20-25 years ago, if you knew the golden quadrilateral is being built somewhere, maybe you would not understand the import of that change. But today, people are seeing photos and videos of infrastructure coming up in the Northeast, something happening in the front lines in Ladakh, where India has been building roads and infrastructure on an unprecedented scale, and likewise now all over the country, whether it's the southern states or the western states. So I think we automatically, because of this connectivity, we sort of feel closer together as a country, and then Absolutely. People have higher expectations. So that is what gives me optimism that the current generation won't accept simply more doles. They want to see tangible changes, and that the present period that we are experiencing is one of great social sort of awakening as well as cultural awakening, in addition to being a sort of economic economic transformation period. So as we become more confident in the society, we are asking questions of our leaders. Fine, you said this, now what? Did you do this?
Right.
And people are holding their leaders accountable. So I don't see the young in the country just settling. And that sort of makes me quite optimistic about India's future.
Awesome. And it's great, as I said, it's great to see the optimism, not just, blind optimism, but very, very calculated as well as thought through optimism. So thank you for your comments, Rajeev. I
think Aashay, you also asked on the challenge.
Yes.
Right. So what challenges could be there for the economy and so on. So I think connected to this, I just wanted to add that, I think as a country, we give extraordinary credence to a tiny section of local interests who want to stall and even unwind economic progress.
Yeah.
So I think the stage that we are right now, we have to give a very high priority to economic growth. All of us who are participating today are very, very privileged people. We are not sort of the median Indian, so to say. So we have to be very mindful of where we are as a country. And yet we find, we are voting for certain leaders or even lionizing certain types of public intellectuals who are anti-growth, who are in fact trying to, create like class or regional fissures in the country. And these are frankly only for narrow sort of self-gain, nothing else.
Right.
So I think where we are in terms of per capita sort of GDP and so on, and where we need to be. So until we sort of, kind of at least bridge that difference to some degree, we need to set aside these debates and focus on growth.
Absolutely. And the fact that the awareness is being raised at such a level and we are talking about it, I think that's a first step towards it. So thank you for that. Thank you for writing this book with Harsh. It was an eye-opener. I recommended it to a lot of my friends. So Rajeev, absolutely. I see a lot of questions coming up. So I'm going to ask Ronak to come on and then let's get into the Q&A. It will be fun.
Awesome. Thank you, Aashay, and thank you so much, Rajeev, for such an insightful conversation. And I think it leaves a lot of us feeling really positive about, the future of India. And so many of us have come back from the US to India to sort of experience this and be a part of this growth. So that was very nice to hear. So let's get into it. The first question is from Chintan Mishra. Aashay, if you can unmute Chintan, and then Chintan, feel free to ask a question directly.
Hi. So, Mr. Rajeev, I have a question around Navam Capital. So what are your key focus areas in deep tech industry?
So we've so far kept a focus on hardware, biotech, and a few other areas like green technology, green, or what's called clean tech. So we've kind of stayed in these areas. So we are not sort of a conventional fund as such. We invest proprietary capital. So for us, frankly, the choice is also always between public markets and private markets. So we allocate, wherever we find sort of better risk reward, better opportunities.
Thank you. Thanks, Chintan. The next question is from Navneet Ajmera.
Go ahead, Navneet, uncle.
Yeah, sure. Very interesting talk. My question was, when you're investing in deep tech startups, what is the kind of fatality rate that you would factor in, Rajeev?
Sorry, what fatality rate?
Meaning, how many would succeed? Like typically.
What's the failure rate, and what do you bake in?
Okay, failure rate.
What would be the probability of?
No, see, so I have a slightly different view here. So Now, if you look at deep tech versus, let's say, consumer internet. So now in deep tech, I think if you do your diligence, if you focus on the right spaces, and find the right kind of companies, then at least one can be assured that there is some kind of a barrier to entry or moat that is there, right? So it's typically these ventures are having some kind of intellectual property or some kind of scientific knowledge base, which gives them at least some time, some opportunity to build up what they are aspiring to build up. Now, if you compare that to some kind of a consumer internet play, I frankly find that riskier in some ways, because in many of those spaces we have found that whichever firm raises the most capital, whichever venture raises the most capital, tends to run the table. So you have larger investors who drive consolidation around that as well. Where let's say a category emerges and then one or two companies kind of become not necessarily market leaders, but they are able to attract the most capital, which makes them market leaders. And then they do essentially a roll up in private equity, what could be called a roll up of the space. So then if you're a allocator, or if you're an investor looking to participate in those companies, it's always hard to say, which of them will actually succeed. So, today we obviously see a company like Swiggy or Zomato, but then if you rewind a decade plus ago, there were 5 Swiggy and Zomatos in every city practically. And, I'm not smart enough to figure out which one of them are going to do very well. I do think it is easier to sort of estimate or analyze whether a given sort of companies focus in, let's say, biotech or some other area, and the intellectual property which they have, whether this can work, whether there is a need for it. So I find that to be more predictable. And then sort of coming specifically to the failure rate, these are obviously very risky sort of areas for investment. And usually the failures happen, I would say, because of technical reasons, not really market reasons. So it's more the situation where the science was sort of, or rather the technology was not ready. It required too much work, which is what I kind of flagged by saying that you don't want to be too early doing this. So that's the risk we try to guard against. I think if you try to keep your eyes open on that front, this becomes sort of less risky, if that makes any sense.
Thank you so much, Rajeev.
Thank you, Navneet. The next question is from Aran Thawani.
Hello, good evening. Can you hear me?
Yes. Go ahead, Aran.
Good evening. Thank you for your talk. So my question is kind of more of a broad question. So we've become a mobile manufacturing superpower. We've gone from like 20 or 30 million phones at the start of the 2010s to like 600, 700 million a year now. But in the high segment phones, the value add from local manufacturers is only 6-7%. Or I don't know this year's number, but that's a trend across most industries. So I work in mainly the automotive industry. In high value electronics, there we're severely lacking it. And now we look at this Russian-Ukraine war. Defense also involves a lot of electronics. As a country, for us, obviously we have 2 massive adversaries as our neighbors. So defense, electronically, how are we going to solve that problem as a country?
No, you're right. It's a major challenge, and I think we started late. That was certainly an error, and I have held the view, and we expound on this theme in the book, that the conventional sort of orthodox view in economics is that free trade is good, right? That's all. If you studied economics in an academic setting, this is the kind of knowledge that's doled out, that free trade is unequivocally a good thing for every country. So I have sort of broken from that absolutist framing, and my view is moderate tariffs are actually necessary for India, and that's what we've had for last several years now, where we have given protection to domestic manufacturers, and or other India domiciled manufacturers. I mean, they could be manufacturers which are bringing in FDI and making in India. But whether it's a Dixon Technologies or whether it's a Foxconn, if you're making in India, rules are the same, right? So it's not protection from that perspective. But I think we certainly did miss a beat by not building up these capabilities in the country for so many years. And we are course correcting now, and we can't do it fast enough. I fully agree with you. This is a major challenge.
And from an investment point of view, how do you see yourself trying to get those opportunities? That's the way I'm thinking.
No, so from an investment perspective now, like I mentioned, so you are right when you say that the value add is low. We are still doing assembly of phones, largely assembly, right? So, but we have to start somewhere. You have to learn to crawl before you walk, and you have to learn to walk before you run. So I don't think it's reasonable for anyone to suggest why can't we start having higher value from day one or day zero. That simply never happens. I mean, if you study China's rise in this space, they too went through a similar curve. And 15 years ago, China was not really sort of adding that much value to a particular phone. Like most of it was just assembled in the country over there. But now there is a significant value add which they do by going backwards in the supply chain, by going backwards in the chain, and the component ecosystem comes up because someone is assembling it in India. And then behind the component ecosystem, you have chip manufacturers and other kinds of companies come up to support that downstream ecosystem. So that's how it builds up. It just takes time. So I think a little bit of patience, I think, will give us results. I think we are on the right track now, and we should stay on that track. And as all of this comes together, like I said, like if you're building a company in this space, then you don't want to be running to sort of some other country, right, to get this and work that out, and your vendors are elsewhere and you are sitting in Bangalore, so that won't work if you're trying to scale. So as we sort of keep going backwards in that chain, and as generally you'll see sort of consumption picking up in India, there will be space for new kinds of things to be developed first in India and then exported elsewhere. Much like what is happening in China now, not very different.
Thank you, Arun. Rajeev, just a quick question. We are over time. So do you have 5 more minutes for a few questions, or do you have a hard stop depending on you?
For sure, we can go to like 8:10.
Okay, perfect.
Sounds good. I'll try to get through as much of these as possible. So Bara has asked me to ask his question on his behalf. And his question is, if you can comment on what you consider as the top 2 or 3 examples of blockchain technology in India, and what are the adoption challenges that are there for these technologies, and how do you overcome them?
So one of the most interesting applications that's going on right now is the whole digitalization of land records. So many states, I think Maharashtra and Telangana among them, are sort of using, so another feature of blockchains obviously is they're immutable, right? So it's a database, you write to it once, you can't change it. And one of the challenges we have in India is land records are notoriously kind of unreliable. Right. So if you're buying a piece of land, how do you know that this person actually owns that land? So that verification itself imposes a lot of like friction and costs and so on in the whole market. So what the government has been doing is that it's been kind of digitalizing land records and putting them on chain. And if you are able to do it successfully, that will solve a big pain point for landholders, for like small plot owners and so on, particularly. So in terms of specific use cases, aside from this particular kind of government application, there's not that much which I can point to as yet, or at least that I'm aware of, which I think is of certain value and standard. Because what unfortunately was going on in India for the most part was the exchanges were kind of doing more promotional work. There are people building applications, but unfortunately that's not happening in India anymore. Okay, that's interesting. Did not realize that land records were one of the primary good uses of this technology, and it's been initiated by the government, you said. Yeah, and in fact, so the scheme is called Swamitva, and so there are two parts to it. One is, even now 660,000 villages that the country has. So they are being mapped firstly with drones.
Wow. Okay.
So you're mapping with drones, and I mean, this is a great example of combining sort of, deep technologies to achieve a certain goal, right? Like, how else would you do this? Like, in all the villages and all the sort of tiny plot sizes, how would you kind of do the surveillance, do the mapping, if you didn't have technologies like drones? In fact, this is a homegrown company, spun out of IIT Bombay, which is doing this. And then there are state governments which are kind of digitalizing the records on the chain. So in that sense, I think some of our governments are actually really at the cutting edge in how they're using these technologies for good governance.
That's amazing. Thank you. Vikas Agarwal has also requested me to ask his question. And his question is, how do you see EV cars evolving in India?
This is a space that I'm really bullish on. I think this is one of the most important challenges for India to solve, actually. So our oil imports are really unsustainably high and going higher. As we become a richer country, one of the first sort of items of consumption that shoots up is energy. And unfortunately for India, we don't have crude oil. We don't have oil reserves, or at least not enough reserves to service our demand. Thus, we are large importers. And that kind of brings a lot of uncertainty into the sort of macroeconomic picture for us. So electrification of vehicles is one way to mitigate that. And alongside that, we are building up sort of renewable generation capacity in the country. And the most exciting sort of space inside the whole EV space, I think, will be the two-wheeler and three-wheeler space, where the impetus to kind of go electric is obvious now, with the high taxes on petrol, and everyone is feeling the pinch, right? Like, the fuel prices have never been this high. So I think that kind of incentivizes consumers to think of alternatives. That also gives a thrust to businesses that, let's try something new. Otherwise, everyone is just content in the same kind of old ways and not looking at new ideas. And in the next 3 to 5 years, I think India is likely to be the fastest growing market in the world for two-wheeler electric vehicles. We are slightly further behind the curve for cars, obviously, because we are also a much smaller car market. But there too, what companies like Tata Motors are doing, it's really something exceptional.
Okay. But what about the argument that most of our energy is still from non-renewable sources? And even though there's EV car adoption, the production is still coming from the same place. So there might be some efficiencies, but it's not the gain that we're looking for.
No, so there's a difference, right? So even if we have fossil fuel or coal-based power, India has coal reserves. So at least we are addressing that oil import issue to some extent. If we switch to coal, yes, we don't address the climate change issue fully, but there too, I think as a country, we are doing a lot of work in building up renewable energy capacity, in building up solar, wind, and other kinds of renewable energy. So, I mean, see, none of this can happen in like 2 years or 4 years. I think it's a multi-decade target, right? So India set a target of 2070, 48 years to hit net zero. So that's the kind of horizon we have. And at the same time, so I'm not of the view either that we should not consume energy because it harms the planet. Frankly, the problem with climate change needs to be solved collectively, but India is not the country which has created this mess. So, and we are actually very, very low on the scale of energy consumption even today. If you look at per capita energy consumption, we hardly register next to the Western countries. So we should be mindful of that, and we don't need to hold ourselves to an impossibly high standard.
Right. Absolutely. Okay. I think we're at time. Should we just do one more question? Is that okay?
Sure. Yeah. Last one.
Okay. Last one. Abhinav, feel free to go ahead.
Hello, everyone. Rajeev, thanks for a really insightful talk. So I just wanted to quickly shorten my question. So how do you see a hardware-based company would improve its valuation? And I mean, as against a pure software-based company where the growth can be really fast, whereas for a hardware-based company, it's not going to be as fast. So what are the crucial aspects? And other thing is how do you see outsourcing manufacturing or setting up the company's own manufacturing setup, which would be more preferred?
So on the first question, unfortunately, there's no simple answer to that. The harsh reality of the world is, what grows will always get a higher valuation. But I think what matters also is quality of growth in terms of, whether certain growth is sustainable. So how is the business being financed ultimately, right? So I think a lot of businesses in the sort of software consumer internet space have taken the tack of raising large sums of money, sort of getting that traction in the market by essentially doing business in an uneconomic manner. At least in the short run, it seems uneconomic. I don't know if it can be solved in the longer run, but at least in the shorter run, it is uneconomic. But that is the kind of challenge of it, that when it comes to hardware or physical world businesses, that distributional friction is always higher. It's just a reality, and there's not much that can be done to sort of get around it. So that's why one way to sort of solve for it is, especially if there is a kind of capital investment heavy kind of, let's say, a manufacturing oriented approach. So that one can always use, like, obviously not equity but other financing modes to fund that, and that only makes sense. So I think a lot of people in the hardware space look at software and be like, let's do this in this manner. But when you're doing physical world sort of stuff, and when you're building factories and you're doing this kind of work, there are, let's say, debt financing mechanisms available, and sometimes it makes sense to tap that. So the valuation game ultimately, if a business earns money, it'll get the valuation it deserves. So always better to play the long game in that sense.
Awesome. Thanks, Ronak. Thanks, Rajeev. I think we can wrap. I'll invite Rekha to just give you a final vote of thanks and close it. Rajeev, I think it's testament that people joined in early for the session, as well as staying back after time, for how interesting and intellectually stimulating it was. I think what I took away was the changes we need to make in the country are not easy, but they are simple. So let's hope we follow the process. And over to you, Rekha, to close the session.
Thank you, Rajeev. I think it's been very interesting, and I think you've thrown light on a lot of misconceptions and cleared a lot of doubts, as I said. So it was great hearing you, and thank you very much, for taking this time out for us. And we look forward to, actually, Aashay will also be sending out the key learnings and the recording to everybody. So and I think it's been a wonderful evening. Thank you so much, Rajeev. Really appreciate your time. And once again, thank you, Aashay. Thank you, Ronak, for hosting the session.
So thank you, Rekha, for inviting me. Thank you, Aashay, for having me on this forum. Really privileged to be with all of you today.
Thank you, Rajeev. And as Rekha said, I will be sending you the recording, as well as what we do is send the key learnings from the interview to all our guests, and I will send that to you as well. So thanks for your time. Appreciate it.
Yes, and of course, last but not the least, a big thank you to the wonderful audience who has kind of been here even past the hour. So, of course, which is all credit to Rajeev for all the insights that he's given and made the session interesting. So thank you so much.
Yep, and the comments also, everyone's saying it's a great session. So the feedback is immediate. Thank you, Rajeev.
Thanks a lot. Thanks, friends.
Bye-bye.
Thank you.
Thank you.
Bye.
Bye-bye. Bye.